We are in the process of paying off a lot of debt. I've been listening to you for about a month now.
Cool.
And my husband has a variable universal life.
I'm sorry.
And I cannot get it through his head that we need to buy term and invest the rest.
Okay.
Can you explain to me, and I just got off the phone with the financial guy that he bought it from, and I wanted him to explain to me why the variable life is better. And he said it's basically the same thing as term.
No, it's not, because if you die, they keep your money.
They do.
Yeah. Ask him how much money you get.
I said, so when we get the money, because he's saying it's for retirement and everything, is basically what it's for. And I said, so when we take that out for retirement, how much do I get? And he said, it's costing me. I said, per month, what's it costing me? And he said, $50 about, and we take 0.9% in fees. And I said, so what's the average yield? Well, it varies. That's all he could tell me is it varies.
Yeah, it varies to be very low.
Really?
Yeah, Consumer Federation of America did a study of universal life, not variable life. Now, variable life has mutual funds in it. That's not what this is.
Okay, mine is variable universal life.
You have mutual funds inside.
Yes.
Okay. The average yield on those was 7.4%.
Okay.
On mutual funds that were yielding 12 to 14.
Okay.
The difference is fees.
Okay.
Okay. You're getting feed to death. The other thing is that you have what's called an annual renewable term, meaning your term insurance goes up every year based on your age.
Right.
And so every year, the portion of your premium dollar that goes out that's going to investments is smaller.
Right.
Because the insurance portion is larger.
Is going up every year.
And you've bought the most expensive kind of term insurance and a real inefficient way to invest in mutual funds.
Okay.
And so when variable life, you do usually get the cash value plus the insurance when you die.
Right.
Now, universal life and whole life, you don't.
Okay.
So variable life is the best of the three products, but they all stink.
Okay.
And let me just tell you, if you put the money straight into a mutual fund and a Roth IRA, you'll kick a variable life's butt. If you buy 20-year level terms separate from that, you'll kick a variable life's butt on the cost of insurance. You beat it on both sides of the equation, on the investment side of the equation and on the other. And the Roth IRA grows tax-free. Variable life does not grow tax-free.
Okay, he's telling me that it is tax-free.
He's lying.
When I pull it out at the end,
if you pull it out at the end, you have to borrow it out.
Okay.
And you have to pay them interest to borrow it out, even at 60 years old. To borrow it, you have to borrow your money out, or it's taxable.
Okay.
When you pull it out, one of the two. It's going to be taxable based on the gain that it's had.
Okay.
And that is absolutely not the truth. It is a lie.
Okay. I told my husband he's making tons of money off of it.
Go to a CPA. And ask them, when you pull money out of a variable life insurance policy, is it taxable? The answer is yes, unless you borrow it. And if you borrow your own money out and pay them interest to do that, then you get into a real nightmare, because here's what happens. You also have to keep the life insurance policy premiums paid the rest of your life then, because if you let the policy lapse, the loan becomes due.
Okay.
And then it becomes an early withdrawal, or not an early withdrawal, but a withdrawal, and it all becomes taxable.
Okay.
And
so we're paying on that the rest of our life.
Yeah, in order to keep it open, to borrow on it, to not pay taxes on it, to pay them interest on your money.
Yes.
It's just a backward program.
Okay.
It's a bad. Is that making any sense?
It makes total sense to me.
All right.
I've got to get it through my husband.
Okay. Well, if he has any questions, you can go online at Dave's Club.
Yeah.
And there's a full explanation at Dave's Club on DaveRamsey.com.
Oh, there is, because I tried to look for it and I couldn't find it.
Yeah, if you hit life insurance at Dave's Club, you'll be able to get it.
Okay, great.
If you're not a member, you have to sign up for the free 7-day trial. And if all you want is one answer, that's the thing to get the free answer, okay?
Okay, great.
And then just don't buy it if you don't want Dave's Club later.
Okay, great.
Okay?
Thanks so much.
Thank you, Kelly.